Join us for onsens, street food, and castles at the Osaka pop-up October 11th to 17th. Facebook group and sign-up link are in the show notes. Welcome to the Wander World School podcast. It's trivia time. Which city of over 4 million people lists Bengali as its primary language spoken? Tune into this month's listener locations to find out. I'm Suzy, a travel-loving money nerd, mom of two, and our family lives between Spain, Colorado, and Japan. On this show, we discuss the stories, logistics, and finances of traveling families and the many ways to learn along the way. Today's end of the month episode includes our end of the summer recap, my favorite takeaways from this month's episodes, and our top listener locations, including the answer to this episode's opening trivia question. For our deep dive this month, we're tackling Investing 101. If you've ever felt like the world of money, markets, and investing was deliberately wrapped in confusing jargon just to keep us normal people out, today's episode is for you. We're stripping back the noise and building your financial foundation from the ground up. And don't forget, I am a financial educator, but not your financial educator yet. So remember that the views expressed on this podcast are for educational and entertainment purposes only, and they do not constitute financial, investment, or legal advice. Everyone's goals, risk profile, and tax brackets will differ, so always do your own research and consult a licensed professional before making any financial decisions. And thank you for signing up for the Wander Weekly newsletter. Shout out to Rebecca, Laura, Rachel, and more. Thank you for signing up. Last week's Wander Weekly covered opportunities in Indonesia, expense tracking, community roundups, global happenings, and more. And as a reminder, everyone who signs up gets the ultimate slow travel and world schooling pre-trip checklist. Go sign up in the show notes right now. Before we jump in, how has your month been treating you? We are in Matsumoto, Japan now. August was a whirlwind of camping, packing, house prepping, and house sitting, saying goodbye to friends and family, and more. I prefer to think of it as see you later, but since it will be a year before we see some of our loved ones, it is always a bit bittersweet. In the middle of the month, we had an awesome Colorado World Schoolers brunch picnic at the park. While the kids kicked a ball and splashed around on the splash pad, the adults chatted about all things travel and world schooling. It was so great to see so many familiar and new faces. One topic that came up is our plans to see the next solar eclipse on August 2nd, 2027 in Morocco. If you were also left in awe with the photos and the videos of this past solar eclipse in northern Spain and other parts of Europe, you don't want to miss this next big one. Our location in Morocco will have almost 5 minutes of totality, and it is a lot less expensive than Luxor, Egypt, where rooms were running thousands per night. We are booked at a water park hotel in Smir Park, Morocco, in northeast Morocco, for a week for about $1,000. I would love to invite other traveling families to join us. Just think, enjoying the beach, scoping out the perfect eclipse viewing spot, and cooling off daily at the water park, all in anticipation of the big day on August 2nd, 2027, when the solar eclipse rolls through again. I plan to incorporate eclipse-themed activities and lots of outdoor playtime. If this sounds interesting to you, click the link in the show notes. Are you based out of Snellville, Georgia, Zanesville, Ohio, or Kolkata, West Bengal? I love looking at the listener locations from this past month. Kolkata, India is that large city from the opening trivia that boasts the local language of Bengali. Send me a text if you're tuning in from India. I received this message and I wanted to share it. Hi, Suzy. Just wanted to share that I'm so glad I came across your podcast. 3 months ago, we left New York City for a 12-month road trip across Europe with my husband and 4-year-old. We're loving the experience, and I'm only sad I didn't know about your podcast prior to starting our road trip. Also, it feels good to see how many other families out there are willing to take this leap of faith and go on an adventure. Thank you for the podcast and for everything I'm learning to make our adventure even better. And this family also shared a photo of them from Stockholm. And it was just a lovely photo to receive and this email to receive. I love receiving these messages and reviews. I'm so glad that these conversations with the other amazing World School creators and traveling families are helpful. If you enjoyed these episodes, would you pause right now to leave a 5-star review on Apple, Spotify, or wherever you listen to your shows? Even better, share your favorite episode with the next traveling family that you meet. For our monthly episode recaps, I must say it was an amazing collection of moms this past month. Michelle from the Traveling Village shared the origin story of the various traveling villages. They are about to head to France for the Village pop-up. Tune in to episode 64 to learn more from Michelle if you have not listened yet. Dr. Sarah Gebauer shared the travel adventures that led to her writing the Go Anyway book. I'm finishing this book right now. You can get it on Kindle if you have Amazon, and it is packed with really helpful travel insights, especially if you or someone in your family has a chronic condition, like Dr. Sarah Gebauer's son who has type 1 diabetes. I highly recommend listening in to episode 65 and checking out the book so that you can understand why it's important to go anyway. And in episode 66, Joanne Paul details the amazing hub that she's curating in Curacao. Have you dreamed of world schooling in the tropics? Listen back for all of Joanne's info about what this opportunity in Curacao could look like and more information on why this island is worth the visit. How about you? What episode from this month resonated the most with you? Did any of the episodes lead you to follow up with Michelle, Sarah, or Joanne? Send me a text in the show notes with your feedback, thoughts, and questions. It is time for our deep dive, which is Investing 101. Heads up for our non-US listeners. While some specific account structures and examples we touch on refer to the United States financial system, the underlying mechanics of building wealth apply no matter where you are in the world. These principles are buying productive assets, outpacing inflation, and harnessing compound growth. So do continue to listen. But first, let's step back and start with a definition. What actually is investing? At its core, investing is simply taking money that you earn today and putting it into productive assets. These are things like profitable businesses, real estate, or the stock market, so that your capital, your money, works for you and generates returns, often in the form of money, over time. Where people might get tripped up is confusing investing with gambling. Gambling has a mathematically negative expected return. It relies entirely on luck and chance, and at the end of the day, there is zero underlying economic value that is created. On the flip side, investing has a historically positive expected return. Why is that? Well, it's linked to the real economy. When you invest, your money backs companies that build products, hire talent, innovate, and generate cash flow. You're participating directly in human productivity and global economic growth. If investing in broad-based index funds implodes tomorrow, then we have a lot worse things to worry about than our stock returns. These are real people living their real lives who contribute to our capitalistic society. No, it's not perfect. But like I said before, we can only improve a system when we understand it and participate in it. And the real threat to your money is not something happening to it in the stock market anyhow. The real risk is inflation eating away at your borrowing power. I'm sure I'm not the only one who has parents who remember buying a house for like a crisp $20 bill and a jar of homemade jam. Inflation is the fact that prices go up. It's the quiet, steady erosion of what every single dollar or euro or yen can buy over 10, 20, or 30 years. If a cup of coffee costs $4 today and inflation averages 3% a year, that exact same cup of coffee will cost around $7.20 in 20 years. If your cash sits under your mattress or in a basic checking account earning 0.1% or worse, its numerical value stays the same, but its purchasing power gets cut in half. So if you ever heard someone say, investing feels risky, I'd rather keep all my extra cash safe in my checking account. Well, now you can tell them the cold, hard truth that leaving long-term savings in cash is not safe. It actually guarantees a loss. This comes down to the difference between borrowing power and purchasing power. Investing is not a get-rich-quick scheme. In fact, real compound growth takes years to see. But investing is the defensive shield to preserve your standard of living against inflation, even before it becomes that way to build wealth. But since this is Investing 101, let's break down those core terms that you're going to run into most: equities or stocks. These are the fact that when you buy a share of stock, you are not just trading a ticker symbol on a screen. You're buying fractional ownership in a real business. If the company grows and earns profits, the value of your share can rise, and they may even pay you a portion of those profits as dividends. Fixed income or bonds. Instead of ownership, think of bonds as loans. When you buy a bond, you loan money to a government or a corporation. In return, they agree to pay you regular interest payments over time and return your original principal on a set date. Other important words to know are mutual funds and exchange traded funds. Instead of picking one individual stock or bond, these are pooled baskets that hold dozens, hundreds, or maybe even thousands of stocks or securities or companies all at once. An ETF trades on the exchange just like a regular stock, giving you an instant broad market exposure with a single click. Asset allocation and diversification. These terms describe how you want to divide your money between stocks, bonds, real estate, and cash. Diversification means that you're spreading out your bets within these categories so that no single company failure can derail your financial life. Often people who work for a company that includes stocks in that company, they will work on diversifying by selling that one sole company stock and buying index funds that are going to be more diverse and cover more different opportunities, more companies. The last term we'll go over is compound growth. This is earning returns or earning money on your original money. And then you earn returns on those returns. Over 5 years, it feels slow. However, over 25 years, over 40 years, over 50 years, it becomes an exponential snowball catapulting down the hill. I love to play with any compound growth calculator on the internet with my son. He likes to see how quickly he can get to $1 million bazillion dollars. Even for us realists who will not ever get to $1 million bazillion dollars, you can see how slow, steady investing over many years can yield impressive results. Future you will absolutely thank you for starting to invest now. So why does learning to invest matter right now? Most importantly, options. It gives you and your family options. Yes, saving for retirement because you will not want to work until the day you die is important. Yes, saving for your kids to have a great start in life is important as well. But even more important is being able to leave a job that you hate. More important is not stressing over every last dollar. More important is designing a life that you love. But let's talk specifically about retirement, because I hope for myself and for everyone listening that we are lucky enough to live to see our last day of work. And I want to live many years after that. But the old retirement model of previous generations included 3 parts. There was a private company pension, personal savings, and Social Security. Today, those company pensions or defined benefit pensions, they have virtually disappeared from the private sector. Meanwhile, Social Security was designed as an anti-poverty floor, not a replacement for your working income. On average, it replaces only 40% of pre-retirement earnings, while the standard retirement planning targets about 70% to 85% is required to maintain your quality of life. Add in aging populations and trust fund pressures, and one thing is clear: self-directed investing is now mandatory if you want a fully funded retirement. This means that you need to take the reins on your future. So we must invest for our future. But it's not just about waiting until you're 65 to finally enjoy life. I would not be recording this from Japan if I felt that you must work until one day in the distant future that you get to live your one wild and precious life. That life starts today. Even if you have $0 invested, you can and should design a life that you enjoy today. And as you build an investment portfolio, you'll ultimately create enough funds to give you certain freedoms. Some people call this FU money or freedom funds. Either way, the more money you have saved, the more opportunities you have to take a mid-career flexible break. If you have an invested cushion that lets you take an unpaid sabbatical, fund family travel, or pivot careers without a panic, that can offer you a lot of flexibility and freedom. You also have the opportunity for workplace autonomy. As you start to save and invest, your relationship with work changes. You gain the leverage to negotiate remote flexibility, or drop to part time, or walk away from a toxic environment. And lastly, saving and investing can help you enjoy important milestones with less debts. A healthy portfolio lets you self-fund major life goals, like launching a business venture or buying a home, without taking on as significant amount of high-interest debt. So I'm guessing that you like the idea of being free from a toxic boss, or taking time off, or focusing more on what is important to you in your life. There are a lot of different ways that you can invest, and there's no one right path for everyone. While public stock index funds are the simplest starting point for most people, productive assets also come in a variety of flavors, such as real estate. You can own physical rental properties that generate monthly rental income or equity, or you can buy REITs, which are real estate investment trusts. These are publicly traded funds that let you invest in commercial or residential real estate without dealing with tenants or maintenance. Other ways you can invest include fixed income and cash equivalents, from guaranteed government debt like U.S. Treasury bills to certificates of deposit or CDs and high yield savings accounts. These tools lock in yields to preserve capital for short to medium term goals. So often, if you have money that you need to spend in the next couple of years, you can put those into treasury bills, CDs, or a high yield savings account to earn more than your typical basic savings account interest. And then lastly, another way that you can invest is to invest in yourself or in businesses. Direct business ownership includes starting a scalable side business or eventually exploring syndications and private equity. These are more advanced methods of investing, which I'll cover in a future episode. So let's bring this all together. Investing is defined as putting your hard-earned money into productive, real economic assets, such as businesses, real estate, and fixed income, rather than relying on high-risk speculation or leaving cash vulnerable to the steady erosion of inflation. We explored the core mechanics of stocks, bonds, index funds, and compound growth. Crucially, we reframed investing not merely as a distant retirement task, but as a practical tool for building your freedom fund that gives you the financial runway to fund family travel and career breaks, support major life milestones without as much debt, and buy back your time and independence. I've been deep on this topic for almost 10 years now, but I am most certainly not the only voice in the personal finance space worth listening to. I will leave you with the most pivotal book to our journey, and one that is highly recommended in many of the personal finance and financial independence communities. That would be the book called The Simple Path to Wealth by J.L. Collins. This is a straightforward guide based on letters to his daughter that focuses on investing in broad market index funds and avoiding common Wall Street pitfalls. Here's the mindset shift that I want you to walk away with today. Investing is not an attempt to pick next week's hot stock. It is the steady, deliberate practice of buying back your future time, independence, and choices. You are trading your active labor today for capital that works for you tomorrow. Don't wait for a huge lump sum or the perfect market conditions. Pick a simple, low-cost, broad market index fund. Automate a reoccurring monthly contribution that fits your budget right now, and let time and compounding carry the heavy load. If you have access to a 401k or workplace retirement account, look closely at your investment options and select the one with a low expense ratio and one that is based on the broad market, such as an S&P 500 index fund. This tracks the 500 biggest companies in the U.S. If you don't have a 401k and you're in the U.S., you can open an individual retirement account with any brokerage, though Vanguard is what I recommend due to its low fee structure and the fact that as a customer, you're also an owner of Vanguard due to its fund investor ownership model. Investing in a Roth IRA means that you've already paid taxes on that money, and thus you will not pay taxes on the money that you take out in the future. And while that money is compounding, you do not pay taxes on dividends. These tax advantage accounts are the key to building wealth over time. We'll get into the topic of designing an investment portfolio and the typical recommended order of investing in future episodes, so make sure you're following along to this show. Let me know also, what is your experience with investing? If any of these terms or concepts were a little confusing, let's chat about it. Set up a free 30-minute call with the links in the show notes. If you're not from the US, what are your investment systems like? How do you create options for your financial future? And as a reminder, don't forget to use the links in the show notes to support this show. There are links for Preply language lessons, Home Exchange, Trusted House Sitters, Chase Travel Cards, Wise, which is the essential app for international money transfers, and Monarch Money, which helps you track your budget and your travel expenses. All these links to support the show are in the show notes. Next month, I chat with some really cool traveling families. We chat about the Bliss Hubs in Thailand, participating in a traveling village, and other cool Japan hubs to combine with the pop-up that I'm hosting in Osaka in October. Until next time, sign up for the Wander Weekly newsletter, stay curious, and keep exploring. Sign up for the Wander Weekly newsletter and get curated resources for your family's journey, along with world-schooling news, family spotlights, and community roundups. You'll also get the essential pre-trip checklist specifically for slow-traveling families. Sign up, grab your checklist, and I'll see you in your inbox soon.